morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian shares drop and treasury yields rise after a sell-off on Wall Street. That's amid concerns about a proposed tax cut bill that threatens to enlarge the U.S. deficit. President Trump ambushes Cyril Ramaphosa in the Oval Office with a video claiming genocide against white farmers. The South African president tries to put a positive spin on the meeting, saying they had constructive closed-door talks. Plus, 25 African startups to watch. Bloomberg unveils its inaugural list of companies developing innovative solutions to the continent's many challenges. Don't miss our interview with two founders later in the show. It has just gone 8 a.m. across the Emirates, 7 a.m. in Qatar. I'm Joanna Versace in Doha. We are still here for the Qatar Economic Forum powered by Bloomberg. It is day 3. So many highlights have come through the last couple of days. We will play some of them throughout the course of this show. But markets, let's talk about the price action yesterday. What we saw is risk sentiment take a nosedive. Yesterday, a weak close for the S&P, closed down 1.6%, sharpest slide in a month. NASDAQ dropping 1.3%. This at the same time as we saw this huge jump in 10-year yields yesterday, climbing 11 basis points. A lot of focus on the price action once again in bond markets. And you can see today we are sort of holding steady at around 4.58, but still quite a significant jump yesterday as attention turns to that tax cut bill that will likely be passed through the House later today. So we're watching those developments very closely. USD slipping a little bit, almost down 0.1%. So dropping on back of the risk-off sentiment, and also as investors continue to sell America Inc. So we'll talk more about that on the show as well with our next guest. And then the handover from Asia today, pretty negative too, down 0.6%. These Asian Pacific indices, specifically the Nikkei, also coming under selling pressure as well. So that is the setup for today. Now, TCW Group President and CEO Katie Koch has told the QEF that markets have yet to fully reflect the U.S. economic environment, which will likely prompt continued volatility and the Fed to cut.
We had the worst reading ever second worst reading ever in the history of the U.S. of consumer sentiment. Yeah. The hard data hasn't yet caught up to that. The tariffs are not going to be as bad as we thought on Liberation Day, but they're still not going to be zero. And I think as we get more data that comes out, markets aren't priced for disappointment. They're now back to kind of record tights in credit. Yeah. And close to record highs in equity markets. And we would just say that's incongruous with the likely data that's coming out.
That was Katie Koch speaking to me yesterday at Qatar Economic Forum. Joining me now is another big voice in the market, Ozan Tarman, Vice Chair of Global Macro at Deutsche Bank. I've got to say, I really love your commentary. Very strong pulse on how market people are thinking, investors are thinking.
Thank you, Juman.
Very
so good to be
here
in our terroir in this exciting setting.
It is. There's a lot going on. But I want to start with markets and the price action that we're seeing in markets, because I feel like in the past couple of days, people have stopped talking about tariffs and have all of a sudden started talking about bond yields and the state and the size of the U.S. deficit once again. Is that what you're hearing from investors?
We can't focus on one thing at one time, right? We have to move to the next big thing. And yes, U.S. fiscal long end of core rates in many countries will be the key focus now. Yesterday, we were already quite nervous about this last week, but 20-year auction, that going bad right after the poor Japan auction, really affected U.S. equities, and this will be with us for a while. The big question mark now moves from, like you said, the tariffs effect to U.S. fiscal, whether U.S. will be able to attract the needed investors into their auctions, etc., etc.
Yeah, okay, so that's the question. I mean, the concern obviously is not the U.S. defaulting, because that's not going to happen. But I guess then the question becomes, what is the clearing price for where long-end treasuries need to be? What are people saying? Is 5% not there?
I'm not so sure. I think we will need to go a little bit higher. The speed will also be very important. Back in April 9, when we worried about trade tariffs, when we really traded like emerging markets, then the speed really also took people by surprise. So if we continue to go steeper, but in a gradual manner towards 475, of course, equities will be nervous, but I'm not sure nervous enough to get to the lows of April.
Yeah.
But if the speed is very fast, then I'm sure both the President and Congress will notice.
So you talked about JGBs, which I think is an interesting development also to note in light of what we're seeing with U.S. yields. Your George Saravelos put out a piece suggesting that maybe there's some substitution effect, i.e. for Asian accounts, specifically for Japanese accounts who would have traditionally bought U.S. Treasuries, they now have an alternative which is yielding a lot higher in their domestic market. Is that going to be a big driver going forward?
Definitely. My partner in success, George, is now the key phrase is net international investment position. So whether a country really needs these foreigners to come and finance their deficits. For Japan's case, that's not the case. They only invest abroad. So what's really key is what they will do with their holdings, whether they will start going much more inwards. And this doesn't have to be from a Japan, for a Taiwan, for Canada. We don't have to go from 75% US holdings down to 30%, down to 20%. Even a 5% incremental makes a big difference. Life insurances, again, another point George Saravelos made, Marika from my research team made. In Taiwan, lifers, roughly 1 trillion. In Japan, 3 trillion. 25% of those in US assets, 50% unhedged. Just think about it. If they try to hedge even some of it, that's what makes the soft dollar story so powerful.
Okay, what about U.S. equities? We've pretty much recovered since the April lows, S&P up almost 20%. What are your investors saying about the trajectory of U.S. equities versus the dollar? Can there be, so to speak, a decoupling between the two?
Fast money mostly missed this big comeback since April 22 when the Trump relents started to happen. Retail is the one that caught it. So in a way, among the fast money, there is more of a glass half empty feeling. If we continue to go steeper in US rates, if we long ends in US, in Japan continues to run out of control a little bit, they expect weakness in equities. I think in the short term that will be true. Maybe short term glass is half empty. Medium term, I'm not so sure. I don't think the lows will be revisited. Why? Because expansion is also very important. Fiscal expansion. At the end of the day, what US is trying to do is going back to that. A lot of stimulus. So we can end up with both US rates going higher and US equities going higher. But first, there will be the scare.
So a couple of months ago, people started getting quite I would say excited about the European fiscal potential bazooka coming out of Germany. Has some of that optimism faded given how difficult it was for Merz to form a government to begin with, and also the fact that US markets have actually made a comeback?
Merz is a fair point, but still 1 trillion is a huge number. Even before the elections and after, people were maybe saying 300, 400. Nobody was expecting that 1 trillion number. So if Merz can execute a plan fast, I think Germany is the driving engine, and that's very, very important. The rest, yes, the room is not necessarily there, so there is some skepticism, but valuations are so attractive still that I think this year's theme will continue to be Europe and China tech doing better than US.
Okay, interesting. So rest of world outperforms US markets.
I think blue hat still wins the day.
Blue hat, okay. Ozan, always good to chat to you. Thank you for joining us here in Doha. Ozan Tarman, Vice Chair Global Macro at Deutsche Bank. Well, coming up, ambushed in the Oval Office, we get details of the tense meeting between Presidents Trump and Ramaphosa. Coming up next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Doha at the Qatar Economic Forum. President Trump has had another tense exchange with a world leader at the White House. His meeting with South Africa's Cyril Ramaphosa was seen as a chance to mend relations strained by Trump's repeated allegations of a genocide against white farmers, claims that Ramaphosa denies.
It will take President Trump listening to the voices of South Africans, some of whom are his good friends, like those who are here. When we have talks between us on the around a quiet table, it will take President Trump to listen to them.
Jennifer Zabazaj is our chief Africa correspondent, joining us now. Another Oval Office ambush, it would appear. And even though the president went in with good faith, President Ramaphosa, things quickly deteriorated.
Right, and Jumana, that word ambush is one that actually came from the president's spokesperson, saying that this was a planned meeting, that they had a schedule in place, and that it changed, as he said, at the last moment. The format of the meeting changed at the last moment. As we could see there, we did see a bit of the charm offensive coming from President Ramaphosa. He was talking a lot about, his gratefulness for President Trump in his first term for supporting South Africa during COVID. And then it really seemed to devolve when we saw a presentation from President Trump. The White House came a bit prepared, showing a lot of videos and claims it was a lot of different interactions that we've seen in the past of parties that are not in the coalition party. And you could see that President Ramaphosa was thrown off quite a bit. But unlike in previous encounters that we've seen in the White House, he did try to keep his cool and again, try to bring it back to trade and investment and bilateral ties between these two countries. But it's a bit unclear, really, where things go from here. And we did see President Ramaphosa coming alongside some of white South Africans who even President Trump called his own friends, golfers from South Africa, also Johan Rupert, who is very well known as well. But it's still a bit unclear where President Trump goes from here. Even when asked whether or not he's going to be at the G20, it still seemed like he hasn't quite made up his mind, and he kept bringing it back to a lot of these unsubstantiated claims that we've seen him purport.
And certainly President Ramaphosa tried to even put a positive spin on it afterwards. But talk us through the impact this is going to have on the domestic economy. Right. The government has been trying to kickstart the economy. The budget, obviously, very contentious. So walk us through the latest developments there.
Right. And President Ramaphosa did note just how significant this relationship is for the growth of the economy. He kept bringing it back, even to Nelson Mandela days, and continuing to quote Nelson Mandela. John Steenhuisen, who is also a part of the opposition party, again tried to talk about how, yes, there are issues within the economy that have brought down the growth in the past year. There is crime, there has been infrastructure breakdowns, and so that's where they kept trying to bring it back to investment and where they see the U.S. supporting the country moving forward. Again, bringing up Starlink even. Elon Musk was in the White House talking about, not talking about this, excuse me, but representing Starlink. Johan Rupert said that Starlink would help the economy grow. And so you kept seeing these South African representatives try to bring it back to the economy and to the growth that could happen if this relationship remains intact. You mentioned the budget. We did get the budget yesterday. We saw the rand weaken a bit after this White House meeting, but the budget that we got earlier in the day actually was welcomed by economists and the markets largely. And so really the path forward is going to be quite important for how this all plays out from the finance minister's perspective and also from the president's perspective. And we're waiting to see what the developments are of the meeting that they had behind the cameras, because potentially that's where the development really is.
Jen, thank you so much for the update. Jennifer Zabazaja, our chief Africa correspondent. Now for a look at some of the other stories we're following this morning. 2 staff members of the Israeli embassy in Washington have been shot and killed on Wednesday evening near a Jewish museum. Homeland Security Secretary Kristi Noem announced the deaths in a post on X after the shooting outside the Capitol Jewish Museum, which is located steps away from the FBI's field office. Police say 1 suspect is in custody. Washington, D.C. officials are expected to give a press briefing on the incident shortly. Dozens of aid trucks have entered the Gaza Strip for the first time since Israel blocked supplies 80 days ago. Prime Minister Benjamin Netanyahu ordered the resumption of aid deliveries following widespread warnings of malnutrition and looming famine. The trucks carrying flour, baby food, and medical equipment were transferred into Gaza after a thorough security inspection, with 92 truckloads collected from the Palestinian side of the Kerem Shalom crossing. And coming up, Omeed Malik, founder and president of 1789 Capital, joins me at QEF in Doha. We'll discuss the top risks plaguing the market next. This is Bloomberg.
The Trump Organization isn't doing business with any government entities. They're doing it with private investors. I mean, many of the people in this room probably know them or have talked about them with that. And so, there is a very clear distinction between those things. In the first term, we actually said we're not going to do any foreign deals, even though that's what we did. Yeah. We had done it for years. We just said, hey, we're going to do this. And the reality is it didn't stop the media from constantly saying, you're profiteering anyway. It was like we stopped entirely. Even the deals that were totally legit, it didn't stop the insanity. So this time around we said, hey, we're going to play by the rules, but we're not going to go so far as to stymie our business forever, lock ourselves in a proverbial padded room, because it almost doesn't matter. They're going to hit you no matter what. So we're just going to play the game.
Let me rephrase the question then. Are there any investments or ventures you would not get into because of conflict of interest?
Yeah, I mean, the Trump Organization itself wouldn't be doing direct deals with government entities because that's not what they do and it's not what we have. But, that would be it. We're just going to play by those actual rules that are laid out by the government. We're going to play by the rules, and it's as simple as that.
That was Donald Trump Jr., Executive Vice President of Development Acquisitions at the Trump Organization, speaking to me here at the Qatar Economic Forum. Well, joining us now is Omeed Malik, founder and president of 1789 Capital, also Donald Trump Jr.'s business partner with 1789. Let's talk about your investment firm and your investment thesis, which is essentially investing in America Inc. and businesses that align with what I guess you would describe as MAGA ideology. Is it because you sense an economic opportunity there, or is it an opportunity to invest in political ideology?
I think it's actually a different thing. It's, as I described a little bit yesterday, this is something we started observing back 4 years ago, actually when the Biden administration was in power. We felt that the private sector was actually becoming quite politicized before we had any involvement in it. It was just on the other side of the aisle, if you will. So ESG started becoming commonplace around 2010 and has grown into a multi-trillion-dollar asset class in and of itself. However, our perspective is, one, we don't agree with it politically, to your point, and two, we think it destroys shareholder value. The other part of it that was very concerning to us was we felt that some way these big companies were in cahoots with the federal government in the United States, depriving us through a backdoor manner in the private sector constitutional rights. And that's when Don and I really wanted to get involved and, to your point, started financing alternative products.
Do you think this is the beginning of a new trend or the end of a trend in the U.S. where capital markets are politicized, so to speak?
I don't think it's going anywhere, actually. I think what this is a byproduct and a reflection of the fact that people and customers want to shop their values in some respects, and that politics has entered into the boardroom, and that's undeniable. The only perspective that we have is we'd like the other half of the country to have a seat at that table. And if some of those larger corporations don't want to give a seat to us, our thesis was that we would provide new options. And that has obviously been built into something much bigger now, where we want to help the president's agenda in the private sector. And that's why I said yesterday to you, we are MAGA investing, Make America Grow Again, mostly around innovation and technology, areas where the government can't be the solution.
Where is the bulk of your funding coming from?
Mostly family offices in the United States.
Okay, and have you found it difficult to get funding, given the views and the investment thesis of the funds? And given some people would say it's quite polarizing.
It's a great question, and we knew coming into that was going to be the case. So for our first fund, we did this because we thought this was right, not because we wanted to raise a lot of assets. We particularly targeted people that we knew had the viewpoints that we did, because we're going to support something like this. And as time has gone on, I think we've been vindicated politically, culturally, and now economically, so more people want to partner with us. But we were early by about 3 years to where the country was going to go. And I think long term, we're okay if some investors may not like what we're doing. There are a lot of investors that don't like ESG or DEI policies, as we're seeing. We're just providing another option for investors.
So I want to ask you about something else. The president tweeted overnight that he's considering taking Fannie Mae private. And I know you sit on the board of Fannie Mae. Can you comment on that? Why would it make sense to do this?
Well, ultimately, it's the president's decision. Fannie and Freddie are hugely important in the United States economy, as you know, and they entered in conservatorship back in the financial crisis. Fannie, which I'm on the board of, has over $4 trillion of assets. And I think the president is seeing that they're doing really well, and there may be an opportunity there to privatize or take it public or uplist it because they're already publicly traded.
But also raise revenue as well.
Exactly, that's right. So ultimately, we'll see what the president wants to do. In the interim, though, as that decision is being made, I'll work with Director Pulte and, as you pointed out, Secretary Bessent and Lutnick to make sure that the company is the best possible financial shape.
What do you think the ramifications would be on the U.S. borrower, though? Because without implicit government support, that will lead to higher interest yields. We already see interest yields moving higher, and therefore it will become more unaffordable for Americans to borrow.
That's one of the critiques of the plan, and that's why we have to start looking at it with the secretaries and Bill Pulte, as I just mentioned, and we'll have an analysis and make the decision that's best for the American homeowner for sure.
Are you concerned about how high U.S. yields are trading right now, 30-year, 5%?
I'm not, because as I pointed out yesterday in the conversation, this is just about 100 days and change into a new administration, and we are doing things that are long overdue. And part of that process was going to have a little bit of a reaction by the bond market and the equity markets. The equity markets have recovered, and long term, as the plan starts getting implemented, tax cuts and some of the more positive things that the market likes, I think the bonds will also react accordingly.
Yeah, so if potentially this tax bill does get passed, it's estimated to add something like $2.5 trillion, potentially even $5 trillion to the U.S. deficit over the next 10 years. You think that that is a valid return on investment then, to increase the size of the deficit so much in order to get this tax cut through?
Again, but the counter to your argument is that you're going to have much stronger growth when you do some of the things we talked about yesterday as well, whether it's deregulation or tax cuts or energy and all the investment that's coming in the United States because the United States is open for business. So that's only one side of the ledger. We're going to see what the growth is on the other side. And of course, you have to give us more time to cut certain programs as well, which we have begun to do as well.
Yeah. Omeed, really good to talk to you. Thank you so much for joining us.
Thank you.
That was Omeed Malik, founder and president of 1789 Capital. Well, speaking of markets, let's just take a quick look at how some of these equity futures are faring. A pretty negative session yesterday for Wall Street. We dipped. Both the S&P and NASDAQ down more than 1.5%. Today, stabilizing. S&P is trading sideways. NASDAQ leaning towards the green as well. European markets, though, look like they're going to be opening up in the red, down 0.7%. And of course, as you were just speaking about, keeping a close eye on yield developments with that weak 20-year auction in the U.S., JGB yields continue to reprice higher as well. So that is having an impact on the curve. You can see 10-year yields at 4.58, 30-year at 5.08%. And coming up, the meeting between President Trump and South Africa's leader didn't go exactly as planned. We'll ask the 91 CEO Hendrik du Toit what lies ahead for relations and what the tensions mean for South Africa's economy. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Asian shares drop and Treasury yields rise after a sell-off on Wall Street. That's amid concerns about a proposed tax cut bill that threatens to enlarge the U.S. deficit. President Trump ambushes Cyril Ramaphosa in the Oval Office with a video claiming genocide against white farmers. The South African president tries to put a positive spin on the meeting, saying they had constructive closed-door talks. Plus, 25 African startups to watch. Bloomberg unveils its inaugural list of companies developing innovative solutions to the continent's many challenges. Don't miss our interview with two founders later in the show. Well, it's just gone 8:30 a.m. across the Emirates, 7:30 a.m. here in Qatar. I'm Jumana Bersachi in Doha for the Qatar Economic Forum. A check on these markets for you. We saw a dip for U.S. equities yesterday. S&P ending the day down 1.6%, its sharpest slide in a month. The NASDAQ down 1.3%, so relatively better, but still a bit of red on the screen. Today, you can see things are stabilizing. The S&P is trading flat. 10-year yields in focus. We moved 11 basis points higher yesterday. A weak 20-year auction sort of set the tone, and lots of people, as you're speaking about with Ozan Tarman early on the show, getting a bit concerned about these numbers that are coming out vis-a-vis the U.S. deficit. So that's been a focus for investors the last couple of days. USD slipping. We're down about 7 basis points, as you can see. And then the handover from these Asian Pacific markets, pretty negative as well, down 0.6%. Nikkei coming under selling pressure. A lot of focus there. Also with the upward movement in yields we're seeing with JGBs. So it's all about yields the last couple of days. Oh, South Africa's President Cyril Ramaphosa has had a tense meeting with Donald Trump at the White House. Trump used the talks to show a video purporting to present evidence of what Trump says is a genocide against white farmers in South Africa. Ramaphosa disputes the claims, saying the video has no credibility and there is no genocide in his country. Joining us now is Hendrik du Toit, CEO of 91 and obviously South African national as well. So I'm just curious to hear your thoughts on how this meeting went.
Good morning, Jemana. I can categorically state that there is no genocide in South Africa. There are crime problems, there are issues, there are contentious issues around land, and I think President Ramaphosa tried to land that point last night in a very difficult situation. But the beauty was, we saw a government of national unity in action. We saw the leader of the opposition actually back up his president in front of President Trump and in the White House. And what most listeners don't know, South Africa delivered a highly contested budget yesterday without the president and the leader of the opposition even in parliament, and that has worked. So that's the positive. In a sense, the country is grinding through its challenges. But what President Trump points out is there is a real issue still around criminality, and actually he maybe couldn't articulate that entirely correctly.
Well, I would say Bloomberg viewers would be aware of the budget because we've been covering it.
You did it very well.
But let me just ask you about whether you think there's potential to breach the divide between the U.S. and South Africa, and if not, that's clearly going to have economic ramifications on the country's trajectory, because you can't be in political confrontation with the world's largest economy.
No, and I think it's a very good lesson. In fact, this experience for the South African leadership is important, that you have to find a way to cooperate with the large economic blocs in the world, whether that be the US, China or Europe, and you better get on message. So hopefully the win for Ramaphosa is that Trump will attend the G20 and respect his presidency. I think that's the start. And then we take it from there.
So far, he's not committing to it, though.
No.
Let's talk about the budget. It finally did get passed. Are you confident about what this may mean for the South African economy this year?
No, I think the process was healthy.
Yeah, okay.
I think there was a very important disagreement between the parties, which the larger party couldn't steamroll through. And in fact, that is democracy at work. The issue is not the budget. The issue is the structural adjustment and the growth program for South Africa, and in fact all emerging markets in a Trump world, or a world where the rich countries are looking inward after themselves and not really supporting jobs outside. And I think that's the big issue everyone should face up to.
How is investor sentiment now in South Africa?
Domestic investor sentiment has been remarkably sanguine and positive. I would say worldwide, if I can quote Jamie Dimon's comments on your channel this morning, is there's a sense of wishing away some risks, but they are not actually South African risks. The big issue is the cost of money in the United States that you started with.
100%, yeah. So what do higher U.S. yields mean for your own investment thesis? How do you have to change your portfolio allocation?
Ultimately, it means that money has to jump a higher hurdle before moving away. I think the weaker dollar is the softening of the blow. And since the beginning of the year, investors, and we know that 2/3 of investable capital in the world sits in North America, that investors are actually starting to think about diversification for the first time. And if you look at the return profile that has changed significantly since 2023, is actually forcing investors to diversify, which may net benefit the rest of the world.
Where are you investing right now?
Our global investment portfolios have always been well spread. We're not a pure US shop. We never believed in a portfolio made of 7 stocks, because that has inherent risks. Europe, I think, is attracting attention. China has quietly done extremely well, and particularly we're very excited about the China tech revolution that's about to take off, which was actually spurred by an attempt to hold China back. Yeah. Not just DeepSeek. Go to Guangzhou and see what goes on there. Yeah. I mean, we're about to see the creation of the one-man unicorn starting. But emerging market bonds starting to look very, very interesting.
Yeah, well, I was going to say, in the U.S., we had a conversation about this in one of the panels yesterday. Yeah. Credit widened out during the April scare, but we've come back in a lot. U.S. IG credit, it's tightened significantly. What are you seeing in EM credit in terms of opportunities there?
It depends what time of the month we talk, Jumana, because the markets have been so volatile.
That's true.
So we try to look through and say, where will markets be in 3 to 5 years' time rather than today? And my big message to all our investors has been diversification is the only thing that's going to pay and save you at this point. You've had 10 years of concentration. The world has moved back, and we are seeing you never bet against the US on a structural basis, as said yesterday here in Qatar by the managing director of the KIA. He put it really well. But the case for diversification is stronger than ever before.
It's a good place to leave it. Really good to chat to you. Thank you so much for coming on. Hendrik du Toit, CEO of 91. Well, we were just talking about this interview. JPMorgan's Jamie Dimon is holding tight on evaluating the impact of President Trump's recent trip to the Middle East. The bank's chairman and CEO says it is becoming easier to do business in the region. He spoke exclusively to Bloomberg's Haslinda Aman at the Global China Summit in Shanghai.
We've been in Saudi Arabia for 80 years plus. So yeah, it has wealth, it has sophistication, and I think it's had leadership that wants to do a good job at trying to grow their economies and diversify their economies a little bit.
Is this the moment for the Middle East?
I hope so. I mean, look, the Middle East is a very complex place, and I think the terrorism is terrible. But I do think that you've seen a complete sea change in how they view. I think they want peace there. I think all the big players in the Middle East actually want peace. I'm talking about Saudi Arabia, UAE, Qatar, Egypt, and I think it would be in their interest to bring real long-lasting peace, including for Israel and hopefully eventually for the Palestinian people.
Of course, we're talking about the Middle East on the back of Trump's successful trip to the region. Do you think that trip marks a turning point in relations? If you take a look at the amount of deals...
It might. I couldn't evaluate that quite yet. I do think, if you go back to Trump 1, that I do think there was a sea change with Trump 1 and how they were looking at Saudi Arabia, et cetera. I think Saudi Arabia's changed a lot. I mean, it's dramatically different from when I first started going there.
JPMorgan CEO Jamie Dimon speaking to Bloomberg's Haslinda Aman in Shanghai today. Well, coming up, 25 African startups to watch in 2025. Bloomberg's inaugural list of companies developing innovative solutions to the continent's many challenges. Jennifer Sabazaja will step into the hot seat to speak to 2 startups at the forefront of banking services and food storage next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Doha at the Qatar Economic Forum. Bloomberg's inaugural list of African startups to watch highlights companies developing innovative solutions to the continent's many challenges. These include issues such as healthcare, food storage, and banking services. We're joined now by 2 of the leaders of those businesses. That's Chilufya Mutale-Mwila. She is the co-founder and chief visionary officer of Eshandi Financial Services. Also with us is Owusu Akoto, founder and CEO of Freezelink. Great to have you both here. Thank you so much, and congratulations on being on the inaugural list. Let's talk first about what it is that you both do within your companies. Akoto, maybe you can start for us.
Sure. So Freezelink eliminates food and medicine waste in Africa for the next billion Africans. through cold chain. So if it's cold, we store it, we transport it, and we build it with an engineering team to connect farmers and factories to local and global markets.
Amazing. Chilufya, financial literacy, financial services is the backbone of Eshandi. Talk about that a bit.
So Eshandi is a Pan-African challenger bank for small businesses and individuals in emerging markets. We're democratizing access to finance to historically disadvantaged income groups in these emerging markets. These come from underserved communities that have been excluded from traditional banking services.
Maybe you both can talk about some of the opportunities and the challenges that we're seeing right now in the startup community on the continent. We talk a lot about the gaps in funding. Are you noticing that, Akoto?
Yeah, definitely gaps in funding in the ecosystem. Obviously, we have a lot of foreign influence in our ecosystems. Even the private equity companies, the local private equity companies, generally you see that they're DFI funded, so development finance institution funded. So with the USA drawing back, with I think probably some inertia when it comes to the Development Finance Corporation in the US. Even the Brits are drawing back. It's definitely had some ripple effects in terms of funding. But at the same time, our pension funds sit on so much capital. And so what we're seeing in Ghana is more momentum from the pension funds, more focus on alternative assets, which has a ripple effect on deploying capital that ends up in some of our local startups.
Has that been your experience, Chilufya?
Yes, well, it's well known that less than 2% of funding goes to women-led businesses. Eshandi is a women-led enterprise, and globally, less than 2% of funding goes to women-led startups. So you can imagine just in Africa alone, what percentage is that? And funding has been a challenge for us. We raised back in 2020, and over 4 years, we're still trying to raise another funding round, and it's a bit of a challenge. And that's why we have to innovate, build a lot of resilience, stay lean, embrace technology, so that we can then evolve around other strategies to basically scale our businesses. And that's the ranking of number 4 on Africa's fastest growing companies really is a testament to our resilience that we've built amidst the challenges that we have around funding.
How do you scale? You're talking about scale within other markets, within communities. How do you do that without that access to funding? What are some of the innovative ways you're maybe finding that you can get there?
So we have strategic partnerships that we struck with mobile network operators that have customer base of over 10, 15, 20 million customers. Through these strategic partnerships, we're able to leverage off the customer base they have, their access to marketing, and their direct access to cost of acquisition. So it's much lower because they already have that existing base. It costs much less for us to reach out to these customers through these partnerships. So revenue sharing models are the new way to go through collaborations without raising any funds, collaborating with banks who are not able to reach the underserved, where we provide the technology, we reach out to the customers, and the banks then provide the funding, and you have revenue sharing models.
And you're seeing the willingness by some of these institutions, yeah?
Yes, they are willing. They may not have the technology and the capabilities to serve the underserved, but they have the capital. And then we have the tech, we have the market access, we have the strategic partners. And then we also have peer-to-peer lending platforms that really help us work with the communities who believe in our mission, who then provide the investments as low as even $1, and then that then is then on lent to borrowers on the platform. So we're connecting investors to borrowers on the platform, and we've raised over $6 million just through peer-to-peer lending and issued over $11 million in loans for over the last 3 years.
How do you balance, Akoto, the need for some of the solutions that you both are speaking to on the ground? You know locally what the need is there, but also you talk about the investors and the others, how you have to appeal to. How do you balance that?
So Africa is not Silicon Valley, and I think that oftentimes our startups do have a spray and pray approach when it comes to funding. We've been guilty of that in the past, but what we found is that it's better to try and find those pots of patient capital who really understand the context. And so we are working, for example, with an asset finance company. They already have an asset finance fund in East Africa, and we're looking to work with them to deploy modular cold storage for our farmers so that they can pay on a pay-as-you-go basis. So really it's a balance of identifying what the need is and connecting with those who really understand the local context.
And you feel optimistic about the trajectory of the startup community on ecosystem on the continent?
I think in the short term, the pain will continue. The best way to raise funds is through your customers. So, you know, we focus on agriculture at Freezelink, but at the same time, we became the first company in the world to distribute the COVAX vaccines back in 2021. So we are focused, but we're also opportunistic as startups are. In the short term, definitely a lot of pain. In the longer term, very optimistic. Technology is on our side, and there are investors out there who understand the context and are willing to learn.
Chilufya, you feel that as well, especially if we talk about the Gulf. Investment interest when you travel outside of the continent?
So we see a lot of access to capital very feasible in these markets. There's huge capital, and I think the demand from startups, I think, is not as much as in Africa. It's really a fundamental, it's really, really clear. Lack of access is the fundamental problem for most startups in Africa. And I think we can collaborate with the Gulf region, Silicon Valley, or any other market, basically, where access to capital is more accessible. And there are many capital providers who actually fund dreams, who fund ideas, who fund visionaries, rather than in Africa, where it's basically about scale. If you've been operating for over 5 years, you have traction, you have all this. Basically, you need to perform, you need to give them results for them to fund you. But in other markets, it's really the idea and you selling the vision, and people believe in the vision and fund it. So there are others who actually scale someone with just an idea and a demo, rather than you having to show a track record of over 5 years. And that's the fundamental challenge that we have. The model is very rigid and it has to change, and investors have to be very intentional about boosting the Africa ecosystem.
Right.
Yeah.
Well, hopefully we're seeing the start of that change. Really appreciate you both being here and speaking with me for a few minutes. That is Chilufya Mutale-Mwila, the co-founder and chief visionary officer of Eshandi Financial Services, and Owusu Akoto, founder and CEO of Freezelink, and also did very well with that music, I'll just have to say. Thank you both for your time. Now, for a look at some of the other stories that we are following. Lagos has been named the world's fastest growing technology city. That's according to the research firm Dealroom. The presence of businesses like InterSwitch and Flutterwave is showcasing the Nigerian city's appeal as a hub for new enterprises. Startups in Lagos attracted 42% more investments last year, with companies raising $252 million. That's despite a slowdown in funding for African startups. Angola's central bank has kept the key interest rate at 19.5% for the 6th time in a row. Governor Manuel Tiago Diaz says the decision came after a substantial decline in the level of inflation. The central bank expects to see price pressures continue to ease in the oil-producing nation. And Nigeria's top opposition leaders have agreed to unite before the next election in 2027. The move seeks to repair rifts that handed President Bola Tinubu victory in an election 2 years ago. The coalition's major sticking point is deciding on a presidential candidate. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website, and our podcast available on Spotify, Apple, and wherever you usually get your podcasts. And don't forget to tune into the next episode of our monthly show tomorrow, showcasing all of our startups. Now, coming up, we hear from Citi's Vice Chair, Carmen Haddad, on the bank's outlook for capital markets activity across the Middle East. That discussion with Jumana Bersetchi is coming up next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersetchi in Doha at the Qatar Economic Forum. Citigroup says it remains optimistic about the prospects for countries across the Middle East despite the recent drop in oil prices. Speaking to me here at the Qatar Economic Forum, the vice chair of the Citi Private Bank, Carmen Haddad, said capital markets activity across the region has surged in recent years, and she expects that trend to continue.
We've had a fantastic run this year where DCM is concerned. The debt capital markets has been very buoyant, and I think that's going to increase. And you know, clients are also looking for uses and sources of alternative financing as well: ECA financing, a hybrid credit, private credit, securitization platforms that we're working around guidelines within the GCC sovereigns as well, and to see how that plans out. So I think a new issuance issuance in new sectors, right? So it's not just only the national champions that we knew them as they were, but also there's a lot of issuances that are coming out of, you know, some of the portfolio companies that we see under the PIF, for example, that are looking to bring in fresh capital. And I think so that's a really good dynamic. On the ECM, as you know, Jumana, we've had a slow start this year, right? Because, of course, Ramadan came in the first quarter, and then obviously if you weren't ready with your prospectus and all the filing that you needed to do, you would have had to wait a little bit longer. And then, of course, the tariff situation. But I think now that volatility has come down a little bit more, for good companies, you see a lot of filing going through the capital markets sort of streamlined. So I think at the end of the day, you'll see a lot more activity. Currently, you know, Citi is active on a few situations, and I think, you know, there's a lot more to come going forward. Absolutely.
I talk a lot.
In the secondary market, though, there's a lot more also we can do, right? So
I mean, that's always been an issue, the lack of liquidity in the secondary market. Is it getting better?
So it's improving slightly, and I think some of the guidelines needs to also, with regulators and need to be, you know, thought through. But, you know, accelerated offerings, for example, rights issuance, you know, convertible bonds, sukuks, which we already do, but, you know, obviously a lot more on the equity side, I think is something that we can develop further, and I think there's a huge opportunity for us to do more business there.
That was Citi Private Bank Vice Chair Carmen Haddad, and that's it for Horizons Middle East and Africa. We hope you enjoyed the coverage from Qatar Economic Forum.